What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is INM, InMed Pharmaceuticals. This finishes at $18.78 today. That is up 70.42%. This was number 2 on StockTwits today, after SPY had 4,500 mentions, so today we're going to analyze it for the first time. So there was a reason as to why the stock went up so much today. On Friday last week, in the aftermarket, we did have some bullish news, so let's check that out. So the news is that the company announced a $6 million private placement priced at $8.68 per share. So that's about 1.4 million shares. So a huge private investment coming into this company. So in the aftermarket, this started mooning, and the momentum continued into today. Kept pumping all day, all the way till the bell rang. And this was some huge volume today. So this seems to be a combination of a momentum play and a squeeze. So I'm very happy for the apes, but at this point, don't get too greedy, guys. It's never a bad thing to hit the sell button and take your profits. But all right, let's jump right in. Let's go ahead and analyze here. Here we had an ascending channel where the upper channel was at 15 and the lower channel was at 11. So if this broke 15 to the upside, that would be bullish. And if this broke 11 to the downside, that would be bearish. This did in fact break 15 to the upside, so the ascending channel is currently a bullish indicator. Down here on the MACD, the moving average convergence divergence, the MACD line is pulling away from the signal line to the upside. So that's a bullish indicator that is telling us that it may be time to buy. And now for the bearish stuff. So we have a gap up created today at 1325. So that's a bearish indicator that is telling us that the stock should come back down to 1325 to fill that gap. And that gap should fill in the short term. The RSI, the relative strength index, is currently at 82. So this is pretty deep in overbought and overvalued territory. So that's a bearish indicator. And in the aftermarket here, this is pulling back down to 1740. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. We have a cup and handle in the making. Bottom of the cup being the low of 580. And there can be multiple possible tops. It can be $19. And if it is 19, that would be a bearish indicator, because that would mean the cup already topped out and is due for a pullback. But it can also be 22.30, 25.20, or 28.50. And longer term, this is part of an even bigger cup and handle, where this has the potential to go all the way back up to the high of 59.25. Although I do believe the most realistic tops would be 19 or 22.30. So the cup and handle can be bullish or bearish depending on where the top is, but it looks short-term bearish and long-term bullish. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 1910 and 1860. So if this goes to the upside, next levels of resistance would be 1910, 1965, 2005, 2070, 2155, 2220, 2275, 2355, 2420, 2475, 2530, 2625, 2675, 2720, 2850, 2920, 2985, 3050, 3120, 3175, 3255, 3320, 3390, 3495, and then 3560. There is resistance above 3560, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 1860, 1805, 1765, 1695, 1645, 1550, 1440, 1375, 1280, 1225, 1160, 1120, 1050, 985, 930, 865, 810, 755, 695, 650, and then the low of 580. So right now at the current price, 1880, the channels to the upside and the downside are pretty decently sized. So expect a regular amount of price action, either way this goes. And this did 32 million in volume today, which is way above the average of 130,000. So very significant volume. So this pump slash squeeze today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So yeah, very bullish PR leading to a momentum pump slash squeeze. Huge gains here, and this may have a bit more upside to go. But unfortunately, in the short term, it's starting to look very bearish. Again, we have some strong bearish indicators in the gap up RSI and aftermarket action. And again, we have bullish indicators in the ascending channel and MACD. And the cup and handle is pretty much a neutral indicator. So more bearish indicators than bullish indicators right now. So right now the stock appears to be slightly bearish to bearish. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. You missed huge upside today, and going long here would pretty much be FOMO at this point. Don't chase, guys. You missed your chance, and if you were to go long here, you're likely going to get burned. There could be a little bit more upside potential. Let's just say this has the potential to come back up to 2220, where a possible top of the cup is. So from the current price of 1880, that would be a little less than a 20% upside potential. So decent upside potential here in the short term. And again, this should come back down to 13.25 to fill the gap there. And from the current price of 18.80, that would be about a 30% downside potential. So I would say going long at the current price would be a high risk, medium reward play. Not really worth it in my opinion. Like I said, it looks like you missed your chance. So if you want to go long here, please do that at your own risk. And it would definitely have to be for a quick scalp. Get in, get your money, get out. But honestly, again, this should pull back down to 13.25 to fill the gap there. And I think that would be a much better entry than the current price of 18.80. And from 13.25 up to 22.20, where the possible top of the cup is, that would be about a 70% upside potential. And it's hard to say how much it would pull back from 13.25, but there is critical support at 10.50. So I don't think it's going to go lower than that. And from 13.25 down to 10.50, that would be about a 20% downside potential. So I would say going long at 13.25 would be a medium risk, high reward play. Definitely worth a shot in my opinion. Somewhat risky, but there is a lot of upside potential at that entry, and it should pay off pretty big in the longer term. So I don't like the current entry of 18.80, but I can support going long at 13.25, and if it pulls back, then you can just average down at the supports that I mentioned before. Now, if you want to go short now, financial advice, looks like a pretty good play to me. Again, more bearish indicators than bullish indicators right now. Likely going to pull back in the short term. Again, this may come back up to 22.20 to complete the cup there, which would be about a 20% upside potential. And again, this should come back down to 13.25 to fill the gap there, which would be about a 30% downside potential. So I would say going short at the current price, 18.80, would be a medium risk, high reward play. Definitely worth a shot in my opinion. It is somewhat risky, but as long as you're able to withstand the upside pressure, this should pull back down to 13.25 to fill the gap, and that should be some pretty fat tendies on the downside. So I can support going short at the current price, 18.80 and higher, and again, I would cover at 13.25 where the gap is for a relatively easy 30% downside gain. So congratulations to everyone who made money on the stock today. Consider taking profits if you're up, not financial advice, and good luck to everyone currently in this stock and to everyone looking to take a position. This is INM, InMed Pharmaceuticals. Thanks everyone for watching today. I appreciate you guys. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.